Hello everyone, Piotr speaking. This is a short update for the forex market. We start with Euro USD. The current situation. Okay, I sent you last Friday a signal for the Euro USD, which most probably in most cases hit the stop loss level. Okay, and that's why it's red here. Although my position stayed, so my stop loss wasn't triggered, but I treat it as a lost position. And yesterday I was trying to enter into this position once again. Okay, so you can see that those level. It looks like that the market is respecting those levels. And yesterday I was trying to get into this position around this level again, and even telling you that it's possible that the market will do this B wave bit lower, which is more typical for a B wave, being bit lower below the beginning of A. Okay, but how the market react, we don't know that. Okay, so we can only try to enter into a position at a good price, but sometimes happens something like that you miss the entry by a few pips. Okay, so the entry was 41 and the market did yesterday with this candle there was only 48. Okay, so 10 pips above or 6-7 pips above. Okay, and you cannot do anything about it. Yeah, you just have to say okay, good, okay, it has failed. Anyway, in my opinion, the market is making the fourth wave correction. Okay, the market has a strong red candle on a weekly chart, so the market most probably will react to this candle. Okay, we've got, considering this daily candle, we've got 1, 2. Today is the third day, so the third correction candle, and we may have either today or tomorrow the final candle. Yeah, so either this will go to the downside, stronger to the downside, or the market will be stopped by this support line. I've shown this support line as well, so you should be aware of this support line. Anyway, it's a strong weekly candle as a red one. Okay, and this count is showing that we should have another last wave to the downside, the last fifth wave to the downside. Of course, it won't be easy to count and to get this fourth wave correctly, because as you can see, okay, so that it has reacted a little bit earlier because the market is looking for that. Yeah, so it's not only me trying to enter into this perfect position, but others are also trying to get into a good trade. Yeah, so that's the reason. Yeah? But okay, assuming that this fourth wave will be ended, okay, so we can play according to the weekly candle, which is red. Okay, so I'll try to get into this fifth position. Okay, so let's see. Yeah, in my opinion, the market, because the fourth is typically more complicated. Okay, so it may take longer, okay, than the second. Okay, so this will take most probably longer, so you must be a little bit more patient and more flexible. And on the other hand, you shouldn't rush yourself. Okay, you should be looking for a perfect entries that gives you the most profits. Okay, so that's the Euro USD. Euro Japanese yen. There's yesterday's position. I had some discussion with my Polish subscribers yesterday regarding profit taking and entering into positions, because you can see I sent an entry with 132.36 and I changed it to 41 because the market was searching for this position as well, for this level. This was shown last Thursday. I've shown last Friday. Okay, so I already shown where the market may react, may reverse. Okay, that was last Friday or Thursday. Okay, so yesterday the market reacted to this level. Okay, and everyone or many us are looking for a perfect entry, and if it was a C leg, a C wave, yeah? So this C wave could have ended 130, 132.30, or a bit higher, and it was in this case slightly higher. Yeah? So if you check this candle, the low is 132.36. Yeah? So my entry was also 36. Unfortunately, the market didn't get there, and I've changed it to 41. Yeah, straight away, because I was afraid that we won't get that level. Yeah, and it actually happened like that. But what I wanted to show you in this case, yeah, this clearly shows that sometimes you won't be able to get into a trade with such a perfect price. Yeah? Okay, you won't be able. Yeah, the market, there won't be this price on the market. Yeah, so you have to enter a little bit earlier. Sometimes I can help, like sending an additional signal, or updating the signal, and sometimes I may not send an update for that. Yeah, and hoping, okay, that the market will trigger the entry, but it won't. Yeah, it can happen. Yeah. What happened later? Yeah? Later I sent a TP0. So TP0, it's a taking profit level, which was 1-to-1. Okay, which was 1-to-1, and I say all the time to the subscribers, yeah, you can play 1-to-1, 1-to-2, 1-to-3. 1-to-3 should be your goal. That's the good risk reward. 1-to-3. Okay, in this case, when we were risking roughly 20 pips or 25 pips, so you could have made 1-to-5. Okay, so there are really good or very perfect trade setups, and in most cases, if you consider all my positions and all my trade setups, signals I've sent in the past, you will find out that most of them are developing strongly in the direction I predict. Okay, so if you miss it, okay, if you get out too early, so you are taking the risk that you won't be able to make more profits. It's obvious. Okay, so if you move the stop loss to the break even, you may be thrown out of that position without any profits, and the market will make 100 pips. Okay, I get out of the position with 1-to-1, hoping and sending another signal, this one with 32. Okay, it's based on this level, on this situation here, on the 4-hour. Okay, so that was another additional signal, but as you can see, the market wasn't able to get into that level anymore, at least yesterday. Okay, so being more secure, like moving your stop loss to the break even, means that you may lose your profits. Okay, so that's the cost for the more security. Okay, so that's the cost of the security. Okay, you are more secure, but the risk is that you will be thrown out of the position. Okay, so you have to consider yourself. Okay, either you will keep it and leave it and let it grow, what I encourage, what is actually what you should do, because you should let your profits grow. Okay, and because if you have a stop loss, you hope until the last pips that the position won't be triggered. Okay, that the stop loss won't be triggered. Okay, and sometimes it happens. Okay, as I said, for many this wasn't triggered, and in my case that it wasn't triggered as well. Okay, but okay, there are stop losses, yeah, and there are lost positions, and you cannot say, okay, I won't have any stop loss positions. Yeah, so this is regarding risk reward and letting your profits grow. Yeah, so okay, either you try 1-to-1, everything what is above 1-to-3 you should consider it as an additional bonus. Yeah, so you can if you see, okay, your position is developing quite well. Okay, let's assume now you've got 100 pips, so you can say, okay, I've got 100 pips or after 100 pips. So then you can say, okay, either I will keep my some of my positions and let them, or I will make some profits. And what I typically do, yeah, because I wrote it actually yesterday, that are typical taking profit levels. Yeah, when traders, when they make 100 pips, 120, 150, 200, okay, they make their profits. Okay, they take their profits. Yeah, because there's the risk you will lose it. You start losing it. Yeah, so you have to make your profits, because otherwise you won't have anything. Yeah. It's not like buying shares and you say, okay, good, this company will do well in the future and I can keep my shares for 10 years. It's not the same situation here on the forex market. Okay, so that was a little bit about risk reward. There is a video in my know-how database. There is a risk reward video, educational video regarding this risk reward and managing your own positions. Okay, it's part of this business. Okay, sometimes you make much more. Sometimes you will say, okay, after 20 pips I have to get out. Yeah, that's like that. Okay, so coming back to this analysis, to this update. Now the market moved quite strongly to the upside. Okay, but you can see we are stopped by this Bollinger moving average 200. This is 1 point. And should the market go down to this level once again, so there will be question, okay, will it stand, will it withhold or not? Okay, and the market may break it. Okay, the market may break it, and there is this position, this 32 with 10 pips or 11 pips stop loss. Okay. Most probably I will leave it like that, because as I said, that's the level where the market should reach, okay, and should have reached yesterday, and yeah, and it wasn't reached yesterday. Yeah, so there are still chances that the market will touch this level. Yeah, but okay, what the market will do, I don't know it. Yeah, it may not. Okay, that's the lower. That's the upward channel. That's the lower boundary of this upward channel. And show it yesterday that okay, we are reacting in this level. Should this withhold? Yeah, there are chances that the market will go to the upside. It will go to the upside, and I'll already shown this. There are some levels above here, so there are chances that the market may go to the upside as well, strongly. Okay, good, let's move forward. So that was the Euro USD, Great Britain Pound, Japanese Yen. This is also quite interesting, because you can see I was already prepared. I have already prepared myself for a trend following and for a position down here. Okay, and the market hasn't triggered this position. Okay, it wasn't triggered. Okay, so I didn't. So nobody from my subscribers, no one has entered into a short position. Okay. Okay, that gives you this opportunity that you can wait until the market will trigger your position. Okay, so that's this sell stop position. Okay, most probably I have to cancel it, but if this was a bigger A, so this could be a bigger B, and there could be this bigger C, a longer wave to the downside. Okay, because it looks like we've broken this support line on a daily. We've broken this support line on the daily. Okay, and the market may react to this break. Okay, typically there are very good trade setups. Yeah, of course, I said the chances for this upward move. Okay, for this last upward move to the upside, of course, we on the monthly we were in the upward trend. Okay, the market may reach those levels here, so you have to be prepared for that as well. And this looks like, at least at the moment, that the market may make a green weekly candle, which will indicate okay, there are forces to go to the upside. Yeah? So the market has the strength to go to the upside as well. Okay, so yeah. yeah, depending on the reaction, on the candle reaction in this levels here. Okay, I do not rule out a move to the downside. Okay, because if this was an a bigger B, which doesn't look like a typical B, but this can be a B, this can be a bigger B. Okay, this will be a B around this tops here. So the market, the B should be at least 90% of an A. So we are approaching those levels. So we will be right here very soon, and the market may react quite strongly to this situation. Yeah. Okay, we'll see. What that was now the USD Japanese yen. Okay, this is this triangle on the USD Japanese yen, and I said in the weekly analysis, everyone is watching it now, so the market may react more strongly. Okay, the market will become more nervous about this situation here. So that's the reaction. Yesterday or the day before, we weren't able to reach this upper boundary, this upper line. Okay, we may make it today, or we may make it here. Okay, so those who are hoping for a move to this upper boundary, they were surprised. Yeah, they were surprised, and they most probably they're around their break-even levels. Okay, so so now the market may touch it, but around here. So that's why I'm saying it's sometimes more risky and more difficult to trade it. Okay, so sometimes even it's better to leave it. Okay, wait for the market, wait for the perfect position. It's easier. Okay, I know it's waiting sometimes it makes you angry and so on, but on the other hand, that's the part of this job. Very simply. Good. Craven pound USD. This is the reaction to those resistance lines, and now it looks like a support levels, and the market is reacting to this. We've got a strong weekly candle, and we may hit this weekly candle on a daily. There were two support lines already broken. I shown this level around 163 a few weeks ago. Okay, actually, when we were already here, I was thinking that the market may reach this level, and it looks like we may make it. Okay, in this case, we will reach a higher top, a new top, and the MACD may make a lower top, and this will be called a divergence. And we've got moving average, convergence, and divergence. Okay, so this will be a difference between MACD indicator and the market itself. Okay, which will indicate a trend change. Good. 4 hour. Okay, this 4 hour. Yeah. Because what could happen here on this 4 hour, we could have a bigger B, similar situation I was talking about or I'm expecting on the Great Pound Japanese yen. Okay, so we had this B, and this could have been a C. Okay, and most probably it was. So this could be a new impulse to the upside. And if it's like an impulse, there are chances for a second wave correction, and then move to the third wave. Okay, we have third stronger wave. Okay, so this could mean, okay, we will reach those level a bit higher. This is possible. MACD is breaking the zero line again. This 5 wave down. Yeah, considering this move, it's ended. Okay, by this FIBO 161. So this is ended. Considering this whole move from here, because this was on 1 and 2, 1, 2, 3, 4, 3, 4, 5. So that's why I was thinking about having another move to the downside and breaching those levels. So I do not rule it out, but as I said, this could have been a B here, and this is only a C wave, and we are making a new impulse So depending on the reaction, on the correction here, I may say something more about it in the very soon. Okay, so that's the Great Pound USD, and let's go to the gold. The situation on the gold, it hasn't changed much since daily weekly analysis, and we can see that the market is respecting this 50 level. So this one reaction, there's a second one reaction. I told you the market likes the number 3, so the third reaction may be the last one and the strongest one. Okay, so this may make the market go to the upside. So this is also possible. Okay, good. So thank you for your time. Thank you for watching. Have a nice day.